Welcome to Trading Lounge and the European indices. I'd like to start with the S&P 500 first because it's pretty much governing the wave count throughout the world. And as you can see here, we're looking at the turn at this point at 2800, and we're looking at 5 waves down for wave 1, back for wave 2, 3, 4 and 5. So this is what a lot of stocks are doing and most indices around the world. So we're looking at this particular little rally moving up here as an A and a B and a C here to the 61.8% retracement level. So it's whatever indice that you're trading, it's pretty important to track this S&P here at the moment because it's governing it, most things. So we've got 5 waves down here as we do in the FTSE and the DAX and the CAC and so on and so on. An A wave, a B wave and a C wave to the 50-60% retracement level, and then down again. So pretty much what we're doing around the place is that we've got our A wave, our B wave and our C wave. So we've got this low here. So once this A wave here finishes, the B wave will come back 50 or 60%, and then you'll need to adjust this accordingly here to get the low of that wave B here, and you can use that as your guide stick here. In most cases we're looking at a simple A, B and C, which is a zigzag pattern, and that will be 5 waves in wave A and 3 in wave B and 5 in wave C. So you can sell in the 5th of the 5th of the 5th here if you like, and so on. But this is our target box here. And that's it really. So let's go in and have a look at some of the other markets. So normally or often we've been starting with the mid cap here, and I've been pointing out that we need to see further down. So the only change here, I think that we may have this as the A wave here, the B wave here and the C wave here for wave 4, and then down for 1 and 2 and 3 and 4 and 5. So yeah, this market should bounce around 21, 22 and 23. Well, it's already been bouncing around 23 there. It will bounce around 22. And what I mean by 22, it can go back to 23, then back again here. We normally find group 1 can be quite choppy. However, we've seen it cut through like butter as well, not hot knife through butter. So but because we're in this 5th wave, I mean, if we really move down here quickly, then we know that we're in a much bigger bearish pattern. But otherwise, we'll see it move down. But anyway, onto the DAX. So with the DAX here, we're looking at an A wave, a B wave and a C wave here, retesting the medium level here, 11,500, the halfway point between 10 and 13, 2 major levels, and we're moving lower here. It would be okay to put wave 5 right here on this low here. That would be suitable. Because we've got 5 waves from wave 4 to wave 5 here. But I think if the S&P is correct, then we're looking at 5 waves down, so we'd need to look down a little bit lower. And normally with the trading levels, I find that if the 11,500 becomes the retested resistance, which it is, then the market will be pulled down to the closest largest number, which will be major trading level here at 10 here. Let's go in closer look here for this on 4-hour chart. So we've got our wave 4 here, and we're looking at 5 waves down. So wave 1 here and ABC for wave 2. So normally I would look to sell in this green. I'd turn this into a green box and would sell right at that point there. That would meet the supply level over here. However, because it's possible, I don't know if it's the case, we have to include everything. So it's possible to have this as wave 5 here. Okay, so we can't forget that. I'm just going to dull it out there as an alternative count. So that's why we want this rally here, this little A, B and C here, and then we draw a line across the low to the B wave here, and then we can go and short that at any time through here. Okay, just bring that into the hourly chart here and have a closer look at that. Don't need that. So this is the 50-60% retracement level, and the A wave should come up to the 11,000 area here. and then the B wave back, and then the C wave. It may not reach up there. There'll be two supply levels. This is where volume has been turned over, and this is where volume turned over. When a market rallies back up, it will mirror those places there. Okay, so they're the two bits there, and they obviously gravitate towards our trading levels 1, 2, and 3, which make up Group 1. And yeah, so wave 2 are normally a zigzag, A, B, and C, a 5, 3, 5 pattern here. So you can go into the fifth wave here. If I can just delete that there. From here, we'll be looking at wave 1 and 2 and 3 and 4 and 5. It may just touch something in there, depending. This is where you got to put the S&P next to this market here if you're shorting this, but you can short into the fifth wave here if you can find it. But the 11,000 here, if you can get a couple of short positions here, then look to add some serious positions under the 11,000 once it becomes the retested resistance. So it'll come down, it'll bounce, it'll come through, you'll have your reference point, and once that reference point is broken, then you can, you know, really move in from that point. I have to say that little move up through here, that should be on lower volume than the previous downtrend. And if that is on lower volume, then you know it's corrective, because corrective patterns are on lower volume. So the volume, the price pattern is one thing, is 50% of the scenario and the analysis, and the volume which creates the price is the other part of it. So reading volume is extremely important. So less volume on the upswing here, you'll know it's corrective, and obviously all your indicators will be giving you divergence at that point. So on to the other markets around the area. So the CAC here, the French market, once again, wave 1 to the downside, an A and a B and a C back to these European markets have dropped quite a lot, so they're heavy on the downside, so they're going to be struggling to the upside. So they probably won't reach their boxes, so be mindful of that. So all you really want is those two lows here. So if we look at this here as 1, 2, 3, 4, and 5 up to here, then we'll look for the A, the B, and the C coming back 50-60%, and then 5 waves struggling to the upside, and then they can drop from that point. So meeting that supply there, you know, those guys will want to get their money back or get out or whatever, you know, all the normal stuff. So yeah, just adjust this accordingly. And yeah, and obviously look to, I mean, 448's a fantastic number, as you know. So we add to positions there. So we really want to build in, you know, 3 or 4 positions into this first leg here. And remember too that the first leg down here will be in 5 waves, and then that will pull back 50 or 60%. So you need to be away from, you know, the stops at that point as well, and then moving down. You need to stay in the trend, so you don't want to over trade. Okay, what else have we got? We've got the FTSE. So once again, same for the FTSE as well. We're looking for that wave 3, an A and a B and a C here for this. I mean, it's quite possible that we could have this down as wave 1 here and wave 2 here, and a nice strong third wave here, pulling back up 30-40% here for the fourth wave, and then the fifth wave down to this point. That's crossed my mind as well. However, we'll just stay with what we've got here, because I'm just reflecting pretty much what's happening in global markets. And the other point here too, this could also be the wave 5 here as well. So be mindful of that. I won't bother getting it out, but that's why the short trade here, it could be fantastic or it may not. So you know, we could have a low in place. That's why this rally here is going to be extremely important to understand in terms of, I mean, this is IG Markets, a CFD trading platform here from Pro Real Time, which is a French company, so it's a third-party app here on this. And I can probably put volume on some of these indicators, but they're not. It's not real volume. It's just like they have on Forex. It's just how many times the price has changed within that period, and yet that could be helpful in reading volume for sure. but you're better off looking to the physical market in opening hours. So the setup here, the A, the B and the C wave here as a 5-3-5 structure here, and also the 6-8 here too. Once this market travels above here, not the first time around, not this B wave come, but the second time here, and that 6-8 becomes the retested resistance, then you want to be shorting that. You know, it'll come down, it'll bounce, it'll come through and come back here, and there's your reference point, and then down again from that point. You can hit it hard at this point here because you've got I know that you'll have the weight of the volume behind you at that, because I know how people think and where the numbers, how they build up orders at certain numbers. So, 7, 8, 9, people will be thinking more of 8 than 7 or number 9. There'll be more orders at that point. Right, okay, so, and the MIB, we can't forget about Italy. So, from the top here, we're looking down for wave 1 and 2 and 3, and last time we spoke wave 4, so we're looking for wave 5 to come down. It came down quite fast here, but an extension in that. But we're still on track though. So an A and a B and a C back into the box here, or it may not reach. It may reach the box, it may not. But traveling above the 19,000 here, not on the first leg, but on the third leg there, the C wave. So we'll have in here 1 and 2 and 3 and 4 and 5. There should be 5 waves in the A wave, 3 in the B and 5 in the C. Once the 19 becomes the retested resistance, then you also want to be short from that point there as well. And so on. Alrighty, thanks for tuning in, much appreciated, and enjoy the weekend. Cheers.